Money liquidation, people like to have their money working only in a particular field. Buy a stack of 20, 40, they're out. Whatever's yours left. So they come together and they form this game plan or distribution or accumulation process that shows up. When they break hard, people say, oh, start a military, but they'll be proactive in the way we look at things. Not after the first one hits. Like this. So, money flow, pressure, law of liquidation. Where does everybody go to? It goes into cash. It goes into cash. So see the Bitcoin liquidation, the bonds lower end, the stocks lower end. So I want to be before the potential of us getting supply in the market. We don't. You want to protect a little bit at this point because I think that's really critical, very important. So now it's on the onus of the bulls to overtake the selling pressure in the markets. You know, the trend is still up. So this is where you have distribution in a market that's overall bullish. Time frames matter. In this case, spacing of time they work with was very important. the slowing down generally means the market's ready for some type of reaction. You can see we're at critical levels of the market. We want to see that money flow continue. I'll update this and do webinars in the future to keep us abreast of things. The metals at this point have sold off a little bit from their highs, simply because it's all speculative as well. It doesn't act the data all with the quality, but the quality of the other features on the market. So SOT, climactic behavior, in the short term will lead us to some type of rally. The risk trend line, shoot, you overshoot it, not overshoot it, doesn't matter. The critical aspect of the markets is simply the fact that how the market kind of reacts to the oversold condition. So, just because we're slowing down does not mean the trend is over. So we get a rally. Your mindset after you get supply always will look to sell that first. It's just the aspect of all the speculative minds we've had for the last 10 years. What could the event be triggered? One thing's let me bring up to you. The tariff thing, play around, the deal with the White House, the SNAP program. All these factors are into uncertainty. You have a president to leave the office 2 years. And I think that if these things go on further, people just get a little upset about things. So the point being is that even though we don't think there's a lot of reasons, there'll always be a reason when the market does that. And when I see the metals, I'd say the stock market just laying back, and just kind of drifting lower, the market goes lower, someone's getting hurt. And so oversold, overbought do not mean the markets can't stay in that area a while. You want the market the ability to react from there. If it doesn't, the market doesn't do that. So money flow of the markets are extremely, extremely important. We went over that in nauseam of why that is. Here's just looking at gold. They had the weakness, selling supply. We want to mark this high here. The market's out here. Outside that range. It's good. So as the market now goes through the extra volume, it says a change of character, the retest should make new highs. Can you do that? Should we do that end? So keep in mind the structure. People try to jump the gun. Don't have to get short unless it's market retestable cause. So the reaction of the markets, if you look at the gold, which on the market into is the LPS. So keep it money flow. When you see a stock that's lagging, that begins to get money, it's cheap. You rather a stock that's more pronouncedly up versus that action, just something to go to a sideways trade range and tie up potential money. You won't do that. So money flow, money flow, money flow. If we have a selling here, back into the range here, if we need a supplier, we call it LPS. Why? So a lower trade range, after an upthrust in the LPS, put the SPSY position, so let's maintain the integrity here. So it's a problem if more, 3 or 4 markets follow in cahoots with the long rotation market going into cash. Well, much of it at home, it depends. So we have the Bitcoin, the dollar, the euro currency, all acting the way a market, higher trades, bond market, same thing. So as the reports go on, as the markets go on, the markets begin to mature and develop more cost in markets. In the next year, you have a yearly presidency, the changing the elections, 2 weeks, the elections, preliminary elections are tomorrow. Yeah. So we see markets going over and going in cahoots with each other instead of money flow to the downside. Very important. Very important to understand that because, again, when they all do it, it's a campaign of distribution to the market. It's a campaign of distribution to the market. That becomes extremely important because this is the selling that occurs. Okay, it's not the supply, it's long vision. It's selling that occurs in the market. And the market then goes down here. We then have the market in the LPS position or LPSY position. Which could lead to the supply area and the trend change. You still need supply, the silent weakness, first market turned down. None of the markets have that. The market turned down except for Bitcoin, but the long duration of markets. People getting long the market, short market, it's like getting out of the market, right? So extremely, extremely, extremely important. Money flow to the game. Money flow of the game. It's extremely important. You see markets that tend to, that's why we don't want to be the weakest markets. We don't want to be a weaker market in a market like the S&P and the NASDAQ and the Russell. We want to be the strongest market, which keep it up to you.